Hi, everyone. Chris Swartz here, First Choice Mortgage Advisors. And today I want to talk to you about an adjustable rate mortgage, or as many of us in the industry call it, an ARM. These are becoming more popular now that interest rates are rising, unfortunately. So I'm getting a lot of questions. Should I take out an adjustable rate mortgage? And I want to just explain what that looks like and some of the things to be aware of when you're exploring an adjustable rate mortgage. And one of the first things you want to be aware of is what the term of that adjustable rate mortgage is. Is it a 5-year ARM, a 7-year, a 10-year? That's going to determine that number in front of the ARM that you take is going to determine the amount of time that that ARM is fixed for. So if you're taking out a 5-1 ARM, it's going to be fixed for 5 years, and then it will adjust once a year for each subsequent year. So you have 5 years to maybe refinance, or maybe you're only going to be in the property for 5 years. Most people are taking out a little bit longer terms, like a 7 or a 10-year ARM. They're a little bit more popular, but that's what that first number means. So the adjustable rate mortgages can be a great way to combat rising interest rates, but you have to understand what you're getting into. So again, you want to make sure if you're going to take an ARM, you take the amount of time that you're comfortable with, whether it's 5, 7, or 10 years. And the longer that fixed period, the slightly higher the interest rate will be. So that's going to be your trade-off. The other thing to be aware of is the rate caps on your adjustable rate mortgage. So the rate caps are how much and at what frequency the interest rate is going to adjust after the end of your fixed period. So for example, a very common rate cap structure would be 5-2-5. Very simply, the first 5 would be the maximum amount that your rate could adjust over the start rate, which is the original rate of the mortgage, after the adjustment period. So if you had, in that example of a 5-1 ARM, after the 5th year, the most it could go up based on the 5-2-5 rate cap would be 5%. If you didn't max out in that first adjustment, the following year, the maximum subsequent adjustments would be the 2. That is your second, cap, and that's going to be the maximum amount it could adjust in the future adjustment periods. The last number is the last 5, and that's going to be the lifetime cap. So those are really important because today's adjustable rate mortgages are not the adjustable rate mortgages of the past. And that's a scary word, adjustable rate mortgage, for people that think about the real estate crash of 08. These are not the same adjustable rate mortgages. And the main reason is they have more responsible rate caps. So don't be afraid to explore an adjustable rate mortgage. The rate caps and the products and programs are much different than the adjustable rate mortgages that existed in the early 2000s. So think about an adjustable rate mortgage. If you're not sure if it's right for you, we can explain a little bit more about the adjustable rate mortgage, but in a time with rising interest rates, something to consider. So reach out, Chris Swartz, First Choice Mortgage Advisors. I'd be happy to answer any questions you have on the adjustable rate mortgages.